Good evening, dear traders. That's very interesting situation in pair US dollar against Canadian dollar. So US dollar against Canadian dollars remains under pressure with downtrend still intact. Despite recent attempts to recover, the overall structure continues to favor sellers. And here the key level to watch is 1.37. Here it is. So where the market previously attempted to reverse and now it was false breakout. And this zone represents an important balance area, and the reaction here will likely define the next move. And now let's talk about a technical perspective. So the downtrend remains in place. You can see weekly chart, and here's daily chart and hard selling pressure from 1.38 and 3. And price now is testing a zone where selling pressure was previously active. So we can see that at 26th of April, there was a pressure from this price and now false breakout. And this is a key zone we will watch. So from a fundamental standpoint, the picture is mixed. Rising oil prices are supportive for the Canadian dollar because it's a part of the Canadian economy. At the same time, the US dollar is supported by global capital flows and broader market conditions. Safe haven demand for the dollar also remains a factor. And in this context, holding below 1.37 keeps downside pressure intact and opens the path for further declines. A break and hold above this level, if it will appear, would allow for a deeper corrective move. Now we still are talking about global range between 1.38, 1.32, and 5. So that's a global range at weekly chart. So this is a critical zone, local zone 1.37, where the market is deciding whether their downtrend will continue or transition into a more meaningful recovery phase. So let's look at 1.37 if the pressure will continue, and it's also depend of on the market S&P 500 because if we have risk appetite, it will supportive for US Canadian dollar also. Have a nice evening and see you soon.